Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin through a different lens. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. Now, we are very familiar with the Bitcoin price chart. In fact, we probably look at it an unhealthy amount, if we're being honest with ourselves. But one of the things we can do is we can actually switch up the way in which we look at Bitcoin's price. And what I mean by that is we value it against something other than fiat currency. One of the reasons that a lot of us come to Bitcoin is to actually get away from fiat because essentially the purchasing power is going ultimately to zero. We understand that through inflation, right? If you just sit on money for a year, it's going to be worth less next year than it is this year. Therefore, by putting your money into something else, you at least have a chance that it might actually retain its value, if not go up. So then why do we constantly measure Bitcoin against something that we expect to depreciate in value? You're probably better off measuring the valuation of Bitcoin against other alternative investments, right? Investments that you could also make if you wanted to with your money to just kind of see how Bitcoin is performing with respect to those assets. Some of the assets we could look at would be how is Bitcoin performing against the Nasdaq or the S&P or against, say, gold for that matter. Why don't we go through a few of these different charts just to kind of see where we are, okay? So this is the chart for Bitcoin. And, to just sort of show where we are, Bitcoin has really been struggling to get back above its bull market support band for quite a long period of time. And even when it does get back above it, so far it's just been immediately sold off and we find ourselves right back below it again. However, if we look at some other types of charts, we might actually see it tell a slightly different story. So the valuation of Bitcoin against the Nasdaq actually shows us above some of these shorter term moving averages. In fact, it seems like the Bitcoin valuation against the Nasdaq is sort of like building up to something. I don't know what, but if you look at this chart, you can see that we're sort of ping-ponging back and forth, and this window that it's moving between is actually getting a bit smaller as time goes on. And you could argue that we entered this range in, say, the very end of 2020. To give you an idea of what it looks like zoomed out, this is what it looks like. Now, one of the things that's interesting about this chart is despite the fact that this is Bitcoin divided by the Nasdaq, it still looks like the Bitcoin price chart. Why is that? Well, the reason is because, simply put, when something goes up 100 million% like Bitcoin over a decade, it doesn't really matter what you're comparing it to does if it's not going up anywhere around that amount, because it just makes it look qualitatively the same, even though quantitatively it is technically different. Okay, so if Bitcoin goes up 100 million%, if the Nasdaq only goes up a few 100%, or whatever it ends up doing over that same period of time, it just doesn't really look like much. Okay, now right now we've talked about how Bitcoin has been behaving like tech stock, and it has. I mean, the correlation over the last few months has been exceptionally high for the correlation between, say, Nasdaq and Bitcoin. But you can actually also see that Bitcoin is currently against the Nasdaq. It's putting in higher lows, but it's also putting in lower highs. So it seems like it's building up to something. If we were to just sort of extend these out, these trends don't typically make it to the end of where they sort of converge. But if you extend this out, you can see that they would ultimately converge by the beginning of 2023. So that'll be interesting to see how that ultimately plays out. I don't fully know which way it's going to break, but when I look at a chart like this, I tend to think Bitcoin will continue to outperform, and so I would argue it's more likely to break up than down. That doesn't necessarily mean that the Bitcoin price has to immediately go skyrocketing, but if Bitcoin remains bearish for a while and then eventually breaks out, then this might be something that we would expect. I mean, it would essentially just be continuing the trend of continuing to ultimately move higher. Okay, so that is Bitcoin through the lens of the Nasdaq. Now, if you look at it against the S&P, it tells a slightly different story. Okay, we are actually below the 21-week EMA, and we're actually trying to fight against the 20-week SMA right now. But for the most part, the story is a very similar story, right? I mean, I'm just sort of connecting the bodies of the weekly candles. Nothing too fancy here. But you see similar things, although the price performance has been a little bit worse compared to the S&P recently, than it is the Nasdaq. But these are also sort of converging, and you're sort of watching lower highs and higher lows. It's interesting because we all know that Bitcoin technically put a new all-time high in November, but on a lot of metrics, we actually did not put in a new all-time high. You can see that reflected in the S&P, and you can also see that when you take the valuation of Bitcoin and in fact divide it by the Nasdaq. There are some other ways that we can measure this as well. One of the things I've mentioned before is by measuring it by, say, like the money supply. And one of the things we can look at here is to see, starting in March of 2020, the money supply just, it essentially went parabolic as governments just decided to start printing money. Again, this is not like the end all be all metric for understanding the exact amount of money in circulation, but it is one measure, and you can see that it has in fact gone parabolic. So then naturally the train of thought is, well, why not take the valuation of Bitcoin and divide it by the money supply? And this is something we've talked about actually a few times. Sorry about that. This is something we've actually talked about a few times in the past. And the reason why it's interesting, you can see I still have the chart on the screen. The reason why it's interesting is, there's been a lot of discussion about whether Bitcoin will return back to 20K, or will it hold at 30K, or will it hold at the current prices. The interesting thing, when thinking about that is people often talk about how it will retest its prior all-time high. And of course, there is a chance that it could do that. I mean, if we draw a line over here, for Bitcoin to go retest its prior all-time high, it would need to drop approximately 51%. I know it sounds crazy. It is a possibility that could in fact play out. But what's actually more interesting is if you take the Bitcoin price divided by the money supply, we already actually tested the 2017 all-time high. This is something we actually talked about in the summer. And it was one of the reasons why I was talking. I said back then it would take us 3 to 6 months to really get this thing back in business. And it's funny how we tested the 2017 all-time high before ultimately rallying back up. For us to actually go back down to those levels, if we had to do, say, like another retest of it, Bitcoin would have to drop against M2 approximately 23 to 24%. To give you an idea of where that would actually put the price, if I just sort of measure that right here, let's go with about 23 to 24%. It would involve retesting the summer lows, so going back down to 30K, but slightly above, because again the money supply has gone up since then. But you would argue that Bitcoin has in fact already tested its 2017 all-time high when accounting for the money supply, and I think there is at least some reason to consider the money supply, considering that the more money that there is in existence, the more people are actually going to use that money to go buy things with it, and it can then lead to higher inflation, it can lead to valuations in stocks that are higher than they may otherwise should be. For instance, if you go look at the S&P and divide it by M2, we actually aren't even putting in new all-time highs compared to what we've seen in the past. I mean, it really does show how extended these things were back in the dot-com bubble compared to where they are today. I mean, I know today's pretty crazy, but things were actually a lot more crazy back then. Okay, and you could see that really easily reflected when you just look at the S&P divided by M2. We can also go look at, say, Bitcoin divided by gold. I mean, I think this is an interesting metric, just sort of see how things are ultimately performing here. And one of the things you would notice, just like with the Nasdaq and with the S&P, qualitatively, it just looks like the Bitcoin price chart. And one of the reasons for that is because, well, frankly put, gold hasn't done anything in the last decade, right? It hasn't done anything in the last decade. For being in an, I would argue that for being in an inflation hedge, gold is still at the same price it was, in July of 2020, and it was also at the same price it was in August of 2011. Think about how many Bitcoin market cycles have taken place while gold has basically done nothing. Okay. With that said, to give my honest opinion here, I do think gold is actually more likely to break up than down over the coming years. But it really does go to show how much quicker Bitcoin is at moving. So again, this is Bitcoin divided by gold. If we go look at the bull market support band for this metric, you can see that, like the US dollar, we were rejected recently and we are still sort of sitting just below it. But over the macro scale, things look relatively good. And over here, you can see that this essentially was exactly a double top on the Bitcoin valuation divided by gold, right? So a top here and then we put in another top there. You could argue that we really didn't even put in a new all-time high when you measured the valuation of Bitcoin against gold. I do imagine that eventually Bitcoin's gold valuation will put in a new all-time high, but obviously it's going to be more than just a few weeks for us to likely go do that. So I do think that measuring Bitcoin against other things is interesting because it gives us a perspective on the market of as to, if you are going to invest your money, where are you actually going to put it? In equities, a lot of times people will say there is no alternative, or TINA for short, right? There is no alternative. So if the stock market looks bearish, people might be like, okay, well, where else are you going to put your money, right? Because the idea is there really just isn't any alternative. I would argue there are alternatives now. I think Bitcoin is a great alternative, and now you can actually measure the performance of these other asset classes against Bitcoin, or you can measure these indices against Bitcoin to see how Bitcoin is performing against them. And so challenge yourself occasionally to go look at the valuation of Bitcoin against other things besides the US dollar. We're so trained to think about how things are against the US dollar, but we forget that the purchasing power of the US dollar continues to deteriorate year after year after year. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Remember, we do have the premium list at intothecryptoverse.com. Thank you for tuning in. I'll see you next time. Bye.